Hey YouTube, this is Zach with Achilles Financial, and today I want to talk about one of my all-time favorite companies in chipmaker, Advanced Micro Devices Inc. They trade on the NASDAQ under the ticker symbol AMD, and I am a huge fan, and I think that they are in an excellent buy point despite the fact that just like the market, they had a huge run up today. So let's dive into some of the fundamental analysis, some of the catalysts for the stock, as well as let's review some of their earnings from this past quarter. All that being said, if you find this content helpful, please leave a like and subscribe. Currently, 90% of my viewers are not subscribers. So if you don't find the content helpful, feel free to unsubscribe at any point in time. However, you'd be really helping me out. So without further ado, let's talk about companies that can execute. A lot of my stock picks that we've been talking about, a lot of the companies we've been talking about lately are on companies that are examples of, well, maybe they will be able to execute. They are promising a lot of growth. They are promising a lot of expectations. And AMD continues to kill it. And for that reason, I'm a huge fan. One of the things that we're going to talk about is they do trade under the incredibly competitive semiconductor and semiconductor equipment subsector of the overall IT, as you can see here, information technology category. And for that reason, the fact that they continue to perform so well is mind-blowing. Right now, they are beneficiaries and I guess somewhat hurting due to the fact that they are currently struggling to produce enough to meet the demand. So again, the benefit there is that they do continue to have incredibly high sales, but they will need additional supply to meet that. So let's talk about some of the characteristics of the company. They're currently trading at a market cap of right at $110 billion. And this is huge compared to some of the metrics that we're going to be discussing and talking about, because again, they are trading at a huge multiple. And for that reason, then I think that we need to acknowledge that because they are trading at a huge multiple, they need to be delivering upon those expectations. And to go ahead and announce some of the reasons I love this company so much. So I am a huge fan of the CEO, Lisa Su, and a large part of that is because she has continued to just dominate where a lot of other companies are already competing. If you look at some of the EPS, this is earnings per share, they are continuously rising. You can see over the past 4 quarters, these were 3 positive surprises in a row, all of which were beating last year. You can see 18-6, a huge increase, 18-8, huge increase, 41-18, huge increase, and 52-32. So when we're talking about year-over-year growth, this is profitability growth, and they are absolutely killing it. A lot of this is coming not just from growing revenue through new sales avenues, but they're increasing the product development and just making a better product. A lot of this market share is coming away from a historical giant in Intel. So because they're able to not only steal some of the market share, but actively grow with the industry, this is huge for them. Some of the ways that I want to look at this is if we dive into the fundamentals here and look at what they're actually bringing in. If we look at the income statement here on the screen, you can see that total revenue on let's look at the annual basis. On an annual basis is growing monumentally. So one of the reasons we saw basically flatline growth from 2018 to 2019 is 2018 we saw a huge run up and people purchasing their chips that were solely related to the expansion of cryptocurrency, in particular Bitcoin. Again, this company produces a lot of powerful processors that are capable of building mining stations. For that, now to highlight all of this, you can see that this has culminated in a lot of growth, a lot of expectations, that they were always profitable though from 2017 onwards. And look at the numbers in 2020. This is a company that was able to execute in an incredible fashion. And for that reason, they were rewarded in an incredibly high profit margin. How are we looking at profit margin? Well, let's go and look at some of the valuations. So I want to talk about profitability to justify their valuation metrics. You're looking at a gross profit margin of nearly 45%. And that is with a lot of fixed expenses that they expect to get rid of as they continue to scale. So right now you're looking at a net profit margin of 25.45%. So when we look at this net profit margin right here, what this means is that for every dollar that comes in, right at 25 cents of that goes straight to profit. This is awesome and incredible, and you can see that it's industry leading. For that reason, I think that I am going to be more than willing to put my money in a company that is actively profitable, and based off what we were just looking at, based on the earnings report, is actively growing profitability. A lot of the SPACs we've been looking at lately, a lot of the IPOs we've been looking at lately, and a lot of the microcaps we've been looking at lately are companies that have not executed to the point of profitability, and for that reason, I am willing to continue to bet on people like Lisa Su. The other reason why that I am more than willing to go after a company like this is I think that they're trading at a discount to their potential. So this is the 3-month chart. I'll show you the 6-month chart. They hung out over or at the $95 to $98 a share for multiple days. They hung out above the $90 mark, and I think that that's what they're worth. And right now, we're just now, again, with a closing trade of right at 91.50 or the last trade here after hours, this is an area where I can continue to see additional growth. The other thing that I want to highlight is at some point in time, there's got to be a market pullback. The entire market cannot just continue to go up, up, and up. At some point in time, we got to expect to see a change. And I think that we're in a really good spot because a company like this has more than $2 billion in cash that they're sitting on. A lot of their cash reserve, a lot of their stock or equity is going to be ramped or rolled together into XILINX. I may mispronounce this, but I believe it's Xilinx, and this is an acquisition that they'll be going through. However, despite the acquisition, which I personally like this, I think it's a strategic asset that's going to help them growing forward. Despite all of this, then again, we still have cash on hand to weather any downturns or slowdowns, not to mention, despite everything that's happening, if they were to go through a potential downturn, not only do they have the cash on hand, but they have the profitability on hand to continue to perform in a very active manner. So if we're looking at this, you can see that cash and short-term investments is increasing, equity is increasing, debt is decreasing. All of this bodes very, very well, and I think it's a great time for them to make an acquisition. So with all this being said, I want to dive over to some of the other key characteristics from a valuation perspective compared to another favorite of mine in NVIDIA. As you can see right here, the gross profit margin of 45% is huge. Where does that put them in terms of valuation? They have a price to earnings ratio of right at 43% or 43x. I think that that is high, but not incredibly high for the industry. You see 32. That's like a Microsoft and Apple, both trade in the 30 to 40 range for the price to earnings. This is in comparison to someone like a Tesla at 1850 or a SpaceX at 3700. So both of those numbers are ridiculous. This one, again, profitable company, absolutely dominating the space. You then see that they're actually trading from an industry perspective at somewhat of a discount on the price to sales ratio and somewhat of a premium on the price to books. For that reason, I think, again, from a sales perspective, as they continue to grow, I think that this is a capability where they can add on a little bit more here because they are definitely continuing to grow. And you can see that here on the growth perspective of EPS growth rate of right at 600%, which is insane. EPS growth 351%. Revenue of 15% quarter over quarter. So from Q3 to Q4, 15% growth, and trailing 12 months, TTM. So year over year, 45% growth. So let me put this in perspective by using their investor presentation. So that's really where I want to go to real quick. So this is the Q4 investor presentation for AMD that was done on January 26th. I will scroll down. Again, you can learn more about the company. You can find everything on the website. I want to showcase these numbers right here of annual revenue in billions of dollars, 45% year over year. Gross margin of 45%, and these numbers are just mind-blowing. 45% growth, 45% gross margin, increase for a fifth straight year. if you are growing, so if they say that they're going to grow for another, let's call it 40%, which they did last year, you're looking at another $3.8 billion, which if they hold this gross margin, assuming no additional expenses, assuming no additional profits, where this could even get better, you're looking at 45% of $3.8 billion. So you're looking at $1.3 billion in profit is the expectation for going into next year on top of what they're already doing. This is unbelievable. Show me one hyped up company right now that is equaling these numbers. For that reason, I believe that they justify that valuation. You can see the quarter over quarter, year over year is 53%. So let's go down a little bit lower, show you some of the revenue trends that you see right here on a quarterly basis. I like this chart right here. Again, Q4 is when a lot of companies expect those big numbers. But if you look year over year from Q1 to Q1, Q2, Q2, and so on, it's nothing but growth. And this company is unfreaking stoppable. I love it. If you can't tell, I'm a huge fan of AMD. So you can see, again, they're averaging greater than 40% gross margin. So again, for each dollar that comes in, they're taking that home. Earnings per share going up. Keep in mind, this is an investor presentation, so it's all going to be good. So you can see right here that their income is insane and the EPS is insane. Look at the difference between 2019 to 2020, up 587%. So there is nothing but good things to say about this company. Again, you can feel free to go through some of this information. I am all for it. I think the sky's the limit for them. The last thing that I want to talk about is the outlook here. So if you look at the fiscal year 2021, they are forecasting additional revenue growth of 37%. So you can see right here that the gross margin is expected to increase by another 2% from where it was today, and they're expecting the overall revenue to increase by 37%. So if you see that happen, if you expect that to occur, you're looking at a total increase right here of more than $1 billion of straight profit if you look at the revenue gross margin. And those numbers are insane when we talk about the capability. For that reason, again, I'm going to continue to sing the praises of this company and expand and build expectations. So for that reason, I'm going to focus on this one, the strong shareholder returns. I think that this is a company that is currently trading undervalued at $91 a share, even at $92. If you go based off of the 2021 numbers at this multiple, this stock instantly becomes $120, $130 stock. For that reason, I am going to continue to encourage people to invest in AMD, which between this one and my other chipmaker love of NVIDIA, this one's a little bit easier to get into at the $90 price tag as opposed to the $580 price tag of NVIDIA. So all that being said, this was my review over AMD. I think it's an awesome company to get into. They're profitable, they're growing, and they're execution excellence, as they say. And this is something that is few and far between in a lot of the companies on Wall Street today. For that reason, I'm going to continuously shout out their praises. Keep in mind that I am not an investment advisor and I don't have any suggestions other than just my unqualified review of this stock. So keep that in mind. Thank you for watching. If you found this content helpful, please leave a like and subscribe. And if you want to join us and learn when we're talking about AMD, when we're making trades, feel free to join using the Discord down below. Thanks. Talk to you later.